Hi, Mark Staroscciak, Managing Partner with Infinium Investment Advisors. This is our market update for the week of October 8th, 2012. As a reminder, anything we discuss here today is purely for informational purposes only. It is not a recommendation to buy or sell securities or follow any investment strategy. Infinium does not provide tax or legal advice, and always consult your own financial advisor before making any investment decisions. All right, so it's been a tough market, right? Wrong. It has been an absolutely terrific market here for stock investors in the last several years. And it's interesting because as we talk to investors out there, people feel beat up. They feel afraid and they feel scared. But when you look at the data and the actual numbers, things look really good. There have been very few periods of time where you've seen such terrific returns in the stock market. Yet stocks are still unloved. I mean, just here, look at the S&P 500. It's up 14.5% through the end of the third quarter. And the Dow nearly double digits, the NASDAQ almost 20%. Now the explanation here that you may not really hear about unless you look into the data is Apple. Apple's been an incredible performer that has really unduly influenced a lot of the averages, not including the Dow Jones because it's not in that index. And that's why one could point to it and say, yeah, it's underperformed. But again, a large portion of the NASDAQ and the S&P's performance can be traced back to Apple. So you have what we consider a narrow market. And in a narrow market, it becomes rather difficult to beat it. So that's why you see, I think, investors really flocking to exchange-traded funds, ETFs, that just mimic the averages out there. But when Apple does start to underperform, you will see active managers again probably start to outperform the indexes. But looking on a 1 and 2 year basis, you have an annualized rates of return in the mid to high 20s, even over 30% in the NASDAQ. So folks, it has been a terrific market to be a stock investor. And I think what you want to do is tuck into your back pocket the fact that we typically don't make market tops or big market tops when investors don't like stocks. It just is not the scenario under which we see big drops. So as long as people and investors are uninterested in stocks and they remain unloved, we think there's a decent chance this market keeps going higher. All right, so one of the other hot topics has been gold and its relationship to the markets. And I think it's really interesting to look at this because so many investors have been gung-ho and afraid of, fiat currencies, the dollar, the euro, the yen, you name it, and they haven't wanted stocks. So this, I think, is an interesting view. It shows the S&P 500 last year versus gold. And here we're using the gold ETF. And you can see they're pretty much a negative correlation. So when one's up, the other's down, nearly perfectly. But that really did change here in 2012. You can see again S&P and gold, and you'd consider these very highly correlated or positively correlated. And so what we're trying to point out here is this is a market that is running on other things than just fundamentals. It's very much a sentiment or an emotion-driven trade. There's a lot of fast money in here looking to make a buck. And what our point is to the average investor out there is don't kid yourself, okay? This is a trader's market. It's not an investor's market. Is there a place for in your portfolio for gold and precious metals? Potentially. But leave it to the professionals. Leave it to the people who know how to trade this market. Because there will be trends like this trend here from May of this year through today. And then, of course, earlier than that, it was a downtrend. But this is a trader's market, and don't be fooled. You will lose a lot of money if you think that you're an investor and you can game this market. It is not for the faint of heart. And we would absolutely stress to you, leave this to the professionals. Now at Infinium, we do have managers that play precious metals from both sides. And even we don't do any investing directly in these markets. We hire this out to the professionals that do know these markets. That to us is a much better strategy than trying to game and try to figure this marketplace out. It's just too difficult. All right, so our considerations to you at this point is, look, there have been huge gains in stocks over the last several years, and stocks continue to be unloved by investors. And put that in your back pocket and rely on that dynamic to give you the confidence to look at stocks again if you've not participated. And when your neighbor and the taxi cab drivers start bragging about their stock portfolios and how much money they're making, that's when you need to worry. But that is certainly not the case today. And again, precious metals, it's not an investor's market, it's a trader's market. Please leave that to the professionals. And there are plenty of options out there to find those professionals who know these markets. We'd highly encourage you to do that. And then it's year end, or getting towards year end. It'll be here quicker than we all believe. But capital gains management, that's really key. Trying to offset your tax bill by harvesting losses potentially. And then there's, of course, talk about what tax rates might be next year. We know and see advisors advising, get those sales in now before rates go up. Well, they said that same thing last year, and rates did not go up. So we think it is an ill-advised move to try to anticipate what we think Congress is going to do or not do towards the end of the year. So hang on, do your traditional tax loss harvesting, but don't go overboard and try to get in front of something before you know the facts. Also gifting, of course, to family, friends, whomever, and your charities. This will be a great time to get that in place to set yourself up for being able to better control your taxes. And there are several good options there that we can talk to clients and folks about. And then we always come back to this, take the time to complete that financial plan. It is going to serve you extremely well in trying to get through this volatile period by having a game plan. And even if you don't know all the information and your mood changes or your goals change, you've got a base to work from and a plan by which to make better investment decisions. So crucial in this type of up and down market. And finally, we would just suggest that if your financial advisor is not talking about these things and doing that for you, maybe it's time to reassess, because a good financial advisor will cover these things around this time of year. With that, I am Mark Staroscciak, and we will see you next week.